Welcome to Fear and Greed Summer Investing Series, brought to you by Vanta, specialists in compliance-led growth. I'm Sean Aylmer. 2024 was a pretty remarkable year for the local share market, with the S&P ASX 200 setting multiple records. So what are the take-home messages for investors out of the last 12 months, and what should we expect for the year ahead? As always, this is general information only, and you should seek independent advice before making investment decisions. Roger Montgomery is the founder and chief investment officer of Montgomery Investment Management, a great friend of ours. Roger, welcome back to Fear and Greed.
Great to be with you, Sean.
Highlights of the year, the last 12 months.
Well, you might remember when we got together in February or March, one of the things that I said was that despite forecasts of a recession and so forth, that this would be a very good year for stocks. And indeed it was. The reason why I said that at the time was because since 1970, or the 1970s rather, whenever you've had a combination of disinflation and positive economic growth, it's been very, very good for stocks, particularly innovative stocks with pricing power. And that's precisely what we saw in 2024. So, there was a continuation of the AI thematic, or at least up until June, July. And then more recently, towards the end of the year, we had Donald Trump's election as president of the next president of the United States. And consequently, there was another bump because he's seen as pro-growth, lower taxes, and a combination of those policies is seen to be good for business.
Were there any surprises though? I mean, it was such a strong year for the market after the previous year, which was another strong year. Did it surprise you just how strong it was?
Not at all. I know it surprised you and Michael, Sean, but if you go back to the interview, I said that 23 would be a good year and thought 24 would be a good year. And as long as that disinflation, positive economic growth background remains the accepted outlook, in other words, sentiment continues to believe, or investors continue to believe that that's the future, then stocks will do well. I think we'll see a broadening of the rally, and we'll see stocks that haven't rallied as hard as some of the leading companies catch up.
Okay, so let's jump into that. Those that have rallied over the last 12 months, tech stocks definitely, locally the financials have done incredibly well.
Yeah.
Crystal ball gazing, Roger, what do you reckon? Yeah. Where are the sectors you reckon for the next 12 months?
Well, here's a big call, and it's a different one to many other analysts and commentators. But I think 2025 could actually be the best of the last 3 years. We might even see stronger gains throughout the year than we've seen this year. That, of course, depends on those preconditions that I mentioned a moment ago, which is disinflation and positive economic growth. And as long as we have that in the background, and there's no disruption from an expectation that China annexes Taiwan or something like that, then it could be a very, very good year.
Resources? I mean, I'm wondering where the growth's going to come. Is it about going to, leaving the tech stocks and financials and heading somewhere else?
Well, I don't think investors are very convinced that the stimulus in China is actually doing much to spur consumers to spend. And in fact, if anything, they have a deflation danger over there. So for us, for our resources companies and for the Aussie dollar, I don't think there's a lot of fuel at the moment or expectation that stimulus in China is going to have much impact. Otherwise, you'd see the Australian dollar much higher than where it is at the moment. And so, no, I don't think it's going to spread out to resources in a big way. But I do think you'll see more strength in innovative companies with growth and pricing power in the small cap space. And a lot of those companies will catch up, I think, to the rally in big caps. And the reason why we saw in 24 the rally in big caps was primarily because there was still some, I guess, latent fear of a recession, and so there was perceived safety in those bigger companies. But I think the rally will broaden to a lot of smaller companies.
And I mean, that's kind of a reversal almost of what we've seen the last couple of years then. It's small caps over big caps.
Yeah, well, it's interesting. Up until 2016, for many, many years, small caps actually beat big caps. It's only been in the last 8 years that small caps have been underperforming. But I think their time is now. I thought in 23 they would rally very strongly because there's a lot of innovative companies there with growth and pricing power. But they were left behind with the big tech, the mega cap tech rally. 24, we saw them starting to catch up, and I think 25, we might see them start to lead.
Roger, thanks for talking to Fear and Greed.
Always a pleasure. Great to be with you, Sean.
That was Roger Montgomery, founder and chief investment officer of Montgomery Investment Management. Remember to get your own independent advice before making investment decisions. This is Fear and Greed Summer Investing Series brought to you by Vanta. Vanta automates compliance for frameworks like ISO 27001, SOC 2, CPS 234 and Essential 8, saving time and money while building trust. Join over 8,000 companies like Atlassian, Dovetail and FireAnt managing real-time risk. Get $1,000 off at vanta.com/fear and greed. I'm Sean Aylmer. Enjoy your day.